Hello, dear friends. Today is a lesson about the stock market and about what stocks are. This is for complete beginners if you haven't invested in the stock market before. So first of all, we're going to talk about what is a company. So a company is a business, it's incorporated, it's registered with the Register of Commerce in the relevant country, like the Chamber of Commerce, for example. And a company basically issues shares. And everybody who owns shares in the company is a shareholder. So, for example, you might have a husband and wife, that's two people, each owning 50 shares in a company. That means the company's got 100 shares in total, and they own half of the company each. And now the company has its own individual identity, just like a human being. So the company can open a bank account and it can buy and sell things, but it only does what the employees or the directors of the company do for it. So if you've got this small company like husband and wife, 50% each of the shares, they might be selling, I don't know, they might be buying potatoes and selling potatoes, and all the profit that they make belongs to the company. But as you can imagine, they have to be paid, so the company might pay them a salary out of the money it gets in its bank account, and what's left over is the profit. And needless to say, the company has to pay tax on its profits. But what happens over time is that the company will accumulate more and more money, and when it's got too much money, what it can do is to pay what's called a dividend. Now, a dividend is something where they pay cash, the company pays cash out of its bank account to the owners. So if you own half the shares, your husband or wife in the situation, each will get half of the total dividend. So let's say it's got, for simplicity, $100,000 in the bank account, and it decides to pay, let's say, 20,000 of that as a dividend. Then each of the husband and wife will get 10,000 each. But now we get to a public company quoted on the stock market. A public company on the stock market doesn't have just two shareholders, husband and wife. It will have literally hundreds, more like thousands or tens of thousands, and in many cases, millions of shareholders. So if you've got 1 million shareholders and it pays $1 million in dividends, each shareholder will get a part of that dividend depending on how many shares they hold. So a shareholder who's got 10 shares will get 10 times as much dividend as somebody who's got one share. And a shareholder who's got 100,000 shares will be getting a lot of the dividend compared with a shareholder who's got just 1,000 shares. So the company, let's take a typical company as an example. What company can you think of? Can you think of a company?
Apple.
Apple, yes, excellent choice. Do you know what they sell?
Their phone, electronics.
Electronics, yes. iPhones, AirPods, which I'm wearing at the moment, Apple telephones, which I'm carrying, Apple Watch, which I'm wearing, Apple computer, which I've got at home, Apple iPad, which you like to play with, and so on. So, and of course, they sell many other electronic products too. So let's take Apple. They have all their iPhones and other stuff made somewhere, like China maybe, but not only China, because they like to diversify, so it could be made in Vietnam. I don't know exactly where they make their iPhones, but it's all around the world. And after they made these devices, what do? They ship them to different countries in the world as finished products and sell them for, do you think they sell them for more or less than it costs them to make it?
Huh?
When they sell their iPhones, do they sell it for more or less than the cost of making it?
More.
They do. And why do they sell it for more?
Well, I get make profit.
They want to make a profit, don't they? And the profit is the difference between what it costs them to make the items and what they sell it for. So if they make a profit, they've got money left over in the bank. Can you remember what they're going to do with that money?
Invest it.
They could invest it in new products or new services or other companies, or they might pay it to the shareholders. And if they pay it to the shareholders, what's it called? I said the word a bit earlier. It starts with the letter D.
Developer.
Nice one. It's a dividend, actually. So they pay the dividend to the shareholders. So if you're a shareholder in Apple, every year you'll get a dividend. In fact, Apple pays 4 dividends every year. They pay what's called a quarterly dividend. Now, in America, companies tend to pay 4 dividends a year. In England, they tend to pay 2 dividends a year. Many European companies, like France and Switzerland, and I think Germany too, they pay typically just 1 dividend a year. I think Hong Kong companies pay 2 dividends a year, if I'm not mistaken, but it does vary by company. There's no rule. A company doesn't have to pay a dividend. It can pay 3 dividends in 1 year, and 6 in the next year, and none in the year after. That's up to the company itself. But you tend to find that most American companies which do pay dividends, and they don't all pay dividends, pay 4 of them every year. So what's the advantage of being a shareholder? Why would you, young man, young Clive, why would Clive Jr. decide to buy shares in Apple? What would make you buy them? Why would you want to buy shares in Apple? What's the point?
Because you can because if they profit, well, they can give it to you a little bit.
They give you a dividend. That's right. So one of the main reasons for buying shares in a company is to benefit from the dividends they're going to pay you. But there's another thing. If the profit goes up, what do you think happens to the share price?
The profit goes up.
Yeah, every year they make more profit. So what do you think happens to the share price every year?
Up.
It does. Now, obviously, it's not necessarily going to go up, but the higher the dividend, the higher the profits, the more people want to buy it at the old price, and that pushes the price up. Now, the price can go up and down all the time for no reason at all. So even though there might be no new news, you'll see the share price. Sometimes, some days it goes up, some days it goes down, and it may be just influenced by other companies. So if other companies are going down, probably shares in Apple go down too, because things tend to move in sympathy. It could be that there's big funds, exchange traded funds, selling, and when they have to sell, they sell a bit of everything, and Apple goes down, and then maybe the next day they're all buying and they buy a bit of everything. Apple goes up with everything. So you'll find that the share price of many companies goes in the same direction as most other companies in the stock market. But that's in the short run. That's on a day-by-day basis. But over the longer run, you'll find that some companies do better than others. Now, let's have a guess. Which type of companies do you think will do the best in the stock market? Do you think it's companies which make less profit every year, or companies which make more profit every year?
More profit.
That's correct. Because the more profit they make, the more people want to own the shares. So that's why people buy shares in the stock market, because they're trusting the directors to do smart things. By the way, these directors are often paid very, very high salaries. So with the high salaries, they've got to be good. They've got to know what they're doing. At least they ought to. Otherwise, why are you paying them? And if they're earning such high salaries, it's their duty to do the best they possibly can for the company and try and make more profit for the shareholders. That's what the shareholders are basically accepting, to allow the directors to have such high salaries. If they can't make more profit, well, the directors should be fired, unless it's not their fault, of course. But if you're invested in a company where nothing can be done, even with the best directors in the world, you've probably chosen the wrong type of company. So I think that's all we got to say today about what a company is. That was a very short lesson, ladies and gentlemen. There'll be plenty more lessons for complete beginners. I hope you enjoyed. If you'd like to hear more, subscribe, like, and I'll answer any questions. Bye-bye, everybody.
Bye-bye.